Good morning, trading world. It is December 13th, 2022, 7:40 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title of this morning's pre-market outlook: Volatility soars at the same time as the market. Not a good sign. Get ready to navigate through a minefield of trade, starting today at 8:30 a.m. with CPI, then tomorrow with the FOMC at 2 p.m. The spikes in price action are going to get crazy. My advice is that if you are in positions, go ahead and identify your targets ahead of time and place that order in queue ahead of time for at least half of your size. I didn't place any new short positions because the 4-hour time frame didn't reach the trigger I was looking for yesterday. I wasn't going to add a significant amount of positions even if it had reached my trigger point. All the time I was going to wait for news to play out and try to lay more positions at extremes after the news drops and a little follow through. The range of extremes are absolutely gigantic today. On the SPY, with the low side being around the 394 all the way down to 384, and the top side being 404 up to 410. My game plan today is it's not much, but I'm looking to sell some further dated premium options premium at extremes. So if we get a nice rally up to that to that 410, I'll be looking to sell some call premium. Naked calls. If we get down below 394, somewhere between 384 and whole, I'll be looking to sell some put premium. And you have to be very careful because moves like that are not for the faint of heart. There also may be some more positioning, maybe taking some some directional shorts if I can catch it. If I can catch it around the maybe 406, 408 area, and things kind of line up indicator wise, if we can get back up there. And maybe the same on the long side if things kind of hold that 384, somewhere between 394 and 384. So it's a lot to kind of weigh up in the blink of an eye today because these spikes are going to be huge. Let's get to the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at 401 to the 402. Queen resistance, which is going to be really key today. This 403 area will hold a lot of weight, but our queen resistance is 403 to the 405 area. And then king resistance is 406 to the 408 area. Excuse me. On the support side, we have jack support at 399 to the 398 area. Queen support 397 to the 396 area. And then king support 394 all the way down to the 384 area. The main thesis for today is bullish closing above the 398.95 with a projected target high of between 399 and 408. The alternate thesis is bearish, closing below the 398.95 with a projected target low of between 398 all the way down to 384. Today is so volatile, don't be surprised to see both the bullish and bearish targets touched today. The current major channel we are in is 397 all the way up to 416. The major channel below is 397 all the way down to 379. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. We closed at the upper end of market strength, breadth, yesterday, so looking for a possible high test and failure in those two indicators could take us toward the retracement level of 397 and below on a spike today. With that, let's get to the scenarios of the day. All right, here we are with the first scenario, which is going to be our expanded range day structure. What will be very key today is the CPI report, and we could get some really funky action off of the CPI report. Starting pre-market, we could see a spike up, then a deep spike down, and kind of just meander or chop or drift lower for a while until we kind of find some sort of support. We could have that initial drop pre-market, chop sideways, and then kind of build it back to sideways to up, find resistance once or twice before consolidating and then continuing a down move. So that's our expanded range day structure. All right, our second scenario is going to be our rounded reversal day type structure. We could get a continued push lower off of that CPI report here, where it takes us in a decent sized drop pre-market, and we continue that drop after the cash open. Find our midday chop around either the queen or king support before going back up with almost or with a semblance of the same energy we came down with the second half of the day. This is our rounded reversal day type structure. Now, we do have a vice versa alert on the rounded reversal day type structure, and it is as follows. It's basically the opposite. We could get possibly a continued push up, spike down all pre-market, and see us continue up after the cash open. Find our midday chop near our either queen or king resistance area, and then spend the second part of the day coming down with near the same force we went up with the first part of the day. So that's the vice versa alert on the rounded reversal day type structure. All right, our last scenario is our trend day down. Based on what could happen with the CPI, we would see a big drop, which suddenly gives us a gap down opening. And we start with the rally back toward the previous close represented by the blue line. Then we find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king resistance. And what will be kind of hard to tell or interesting to see the rest of the day is that after that lunchtime chop, whether we continue lower or we find our way back to kind of a slight rally into the close. Because if we continue to fall into the close and sets up that ugly closing, it kind of gives precedence for, or sets precedence for us to kind of rally off the Fed announcement tomorrow. So I'll be keeping a close eye on this to see how I'm going to try to play this, which we could still have some downward drift that morning, but it could probably still put us in a position where once that Fed announcement hits, we get a couple sharp moves and start a bounce, which could likely be our Christmas rally going in for the rest of the opening trading days that we have. So that's what I'll be looking for. I hope that excuse me, I hope this helps. This is not the day to just put something on and not know, not understand, not have a complete grasp of what your risks are. More important than direction or even getting direction right is understanding your risk and knowing whether you could take that type of a loss. And that's why, especially in smaller accounts, I recommend doing spreads right now. They're very defined risk trades where you know and understand what the potential risks are. Even though it does put a cap on potential profits, it's worth it to that one time that it doesn't go your way and it saves you from losing an entire amount that's more than what you're prepared for. So these next few days are nothing to play with, so be very, very careful. Again, like I always say, your most important job as a trader is to protect the capital that you already have. We do that by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. Be safe, be careful. Let's go out and have a positive trading day. As a matter of fact, let's go out and make it a great one.